of our weekly money updates. In these sessions, you hear about the highest, the most important money news you need to know about and what you should be doing about it. It's one of those very practical sessions. It is set up to be very practical, and it's going to be for only 15 minutes every Saturday. So look out for it. Now, this week, we had a lot in the news. And the way we structure is that we start with global, go to Africa, and then come to Nigeria. So this week, let's talk about the news in the US. So it was announced that Amazon was jumping head on into the AI race, and basically they bought a company. They bought an AI company, and the idea for them is that they're joining in on the race or the heats or the race of the AI race, right? Basically, they bought a company called Anthropic. They put some money, $2.7 billion, a whole lot, into Anthropic, a startup that is focused on AI, artificial intelligence. Now, why is this important? Because one, Google has Bard slash Gemini that they're working on, and they're pushing that hard. Microsoft bought OpenAI that owns ChatGPT that we all know. And so Amazon is coming into the game now. This is increased competition, one. And then two, when you come from the angle of the fact that Amazon, a lot of startups, a lot of apps, a lot of tech guys are on the Amazon web servers. They use the servers. The AWS servers are a thing, and it's one of their major revenue generating arms. Then you realize that by the time they set up and integrate, it's going to become a powerhouse. Now, what is it for you as an investor? First, I would say that if you are a tech person or someone in the space, developing products around AI right now, or apps or anything around that, solutions around AI is the ish, because there is a lot of capital flowing into it. But for you as an investor, artificial intelligence is the future. The expectation is that world population is going to grow to about 10 billion in the next couple of years. What does that mean? There's going to be a lot of big data. There's going to be a lot of things that as individuals we will not have the capacity to quantify on our own. So artificial intelligence is the thing, is the future. In fact, artificial intelligence is now. So if you have any opportunities to invest in any of these AI companies, or if you find startups that are in that space and are doing something very intelligent, you might want to piggyback on it because there's a lot of capital flowing there. Now, of course, with that comes a caveat that artificial intelligence has some um regulation. There's going to be a regulation that's going to come up on that. Why? Because it's an ethical issue. There could be some ethical issues coming up along with artificial intelligence. So just know that there's going to be a lot of up and downs. There's going to be a lot of fines. Look out for it. But in the end, we will find a middle ground between regulations, what should be done and what can be done. But artificial intelligence is the way forward. Now, let's go to Africa. Now, Africa is quite exciting for me. The first thing is that Zambia has sort of reached a deal for their three. They reached a deal for their debt. So Zambia defaulted on their bonds, their euro bonds, in 2020. They were the first African country to actually default on their euro bonds in 2020 on the back of the COVID pandemic, and and the thing about it was they struggled. So just imagine a bond where one unit of the bond is actually $100, and it went as low as $30 per unit. So imagine the losses that people have incurred on the back of Zambia. But of course, the reason why they defaulted because they were in a very tight economic situation. So number one, even in this restructuring, the fact is that everybody's not going to get their money. You're not going to get your full 100. You're going to get a portion, right? But it's actually better than the way they just went cold and quiet and not paying anything. Now, what has happened is that between that 2020 and now, so if you had the bond and you were supposed to be getting interest payments, first of all, they just stopped all those interest payments, right? And with this restructuring, which we are waiting for the exact details, um, the bondholders will now have a clear plan of when am I getting, how much of my capital am I going to get back, and when am I going to get it, when should I expect it. So this is amazing news for Africa. I can see that there's a trend that um a lot of these countries that were in a really bad position, they are beginning to trend out of it somehow or the other. And it just buttresses this thing where the economy is always in cycles. And so don't think of now and always being the noun. Pull back a little and look at the broader picture. The fact is that the economy is always in cycles. So even if it looks bad, as long as it does not shut down, which a sovereign entity like a country cannot shut down, as long as it doesn't shut down and there is no war, because war is what extends a bad economic situation, or there's no social unrest, as long as it's stable, as in there's stability, you are sure that give it time, the country will get out of it. And it's not even there's it will always get out of it. Look at history. Something will always give and you get out of it. Right, that's that. Now for the next, so should you know, the fact is a lesson for everyone looking to go into Eurobonds. The nature of Eurobonds are are investments in a foreign currency from another foreign entity, from another country. Let me explain. So Eurobonds, if you're in Ghana and you issue a Eurobond, your Eurobond will be issued, for example, in London, but it will be issued in dollars. So it's different from a foreign bond where you issue a bond in pound in the UK. So with euro bonds, you issue the bond in one currency, but you issue it in another country. Now, the risk of doing euro bonds, or raising or issuing euro bonds by entities, is that as long as it's not your currency, at the point of paying, you actually have to have money to pay in dollars. So what you should be looking out for, especially for countries, is how much reserves do they have in dollars. If they don't have good reserves, then it's an indication that there is a high chance that when it is time to pay, they will not have enough dollars to pay. But if it was a local bond, meaning that a Ghanaian bond in cedis or a Nigerian bond in naira, right? The fact is, if things are bad, what will happen? The worst that can happen is that the central bank will just print excess cash and pay everybody off. There will be inflation, but everybody has been paid off. That's that. So everybody, when you're thinking about, oh, I want to invest in euro bonds, understand the risk of what you're going into. That's that. Now, the second African news is actually quite exciting for me. It's that M-Pesa Power partners with Access Bank, Access Holding, for remittance solutions across East and West Africa. Now, this is particularly exciting. Why? I need everybody to know that as much as things are not working, things are not working. If you've read or if you watch the stories or the series of the men who built America, the fact is this: um, societies, economies evolve over time, and the things that people do. First of all, private sector is what drives it. Right, private sector always drives it. If you're expecting the government to drive a society or an economy forward, you are wasting your time. Now, deals like this are the makings of the men who built America or the men who built Africa. Why? Because what are our challenges? Our challenges are that for us to trade, for a Ghanaian to trade with someone in Nairobi, we will first convert to dollars and then now convert back to maybe move from CD to dollars back to Kenyan shillings. Now, that in itself, when we are in the same we're in the same region, right? Another thing also that's an issue is actually transferring money. The cost of transfer is probably easier for you to do a wire transfer to the United States than it is for you to do, or cheaper than it is for you to do across Africa. So any solutions, especially solutions that have been tested, that is bringing this to Africa is empowering trade. Once you are empowering trade, you are empowering economic development across border. So it is actually amazing. Now, of course, we'll look into the modalities, we'll see how it's going to be unpacked over time. But signing this kind of partnerships across East and West Africa is it's something that should be lauded, like we should be shouting about it. It is really good, and we want more of this. Now, for the investor, one, if you are on the Nairobi side of things, Safaricom shares are a way to go, because why? They're going across Africa. They're going, do you get? They're going, they're spreading their bands, especially when, because they've struggled to enter into penetrate into West Africa. Access Bank has a good holding. So that's one. And then for the Access Bank holding, which we'll also talk about because they're also part of the capitalization thing, Access Bank holding, there's a lot of assets that there's a lot of value that is being unlocked in that group. And so we need to watch out for them. I'm not giving you stock recommendation. I'm just telling you what's happening. Now, okay, short break to let you know that this session is powered by the Money Weight Club. Ideally, I should have done some kind of testimonial or something about the club. So it's powered by the Money Weight Club, and basically, the Money Weight Club is a community of investment professionals. And maybe I should actually just do it. Let me see if I have it set up easily, where people just learn about investing and take action. Let me see if I have a video that I can show. Hmm. Okay, let me put one. Let me see this one. So a 1 minute video.
Hey everyone, my name is Napa Musa, and I am a proud member of the Money With Club. I joined the club a little over a year ago, and at the time I joined, my goodness, like my knowledge of investing and where to put money and how to manage money and make money grow was limited. But when I entered the club, I was really eager to learn. Little did I know that would be one of the best decisions I would have made about my money. But the great thing about being part of the club is everybody, and I mean everybody, is very open to sharing what they know. So if you fast forward to today, I can proudly say my understanding of investments has grown tremendously. And it doesn't hurt that I have started getting a lot of alerts into my investment account, and I never used to. So I have a diverse set of investments. I have a really good portfolio that spans across real estate to creative materials like art and movies. And I also have a very secure kind of investment portfolio. So I am much stronger in what I want to invest, understanding where I want to invest and how I want to invest. So being more strategic around my money is something I've definitely learned from the club. I can't lie, I really do like the interesting investments that come to our table, from movies to real estate. Really nice to see the different types of investments, and then also VC startup funding as well. So that's really nice. And I've made some great friends in the club. In fact, in other parts of my life, I've collaborated with other members of the club, so that has been pretty amazing. One of my most memorable experiences in the club. So I left the club, and during the time I left the club, there was a very interesting investment that came the way of the club, and because I had left, I wasn't part of it. I joined again after 3 months, and that investment, the returns, I think it was 8 times what people invested. And this isn't a normal occurrence at all, because we all know that if you want to become a millionaire or you want to become rich, your wealth should grow in a very slow and sustainable manner. That is my most memorable experience, and it's not a very good experience. So, in conclusion, being part of the Money Weight Club has really been an incredible ride. From a novice investor to someone who is continually growing, evolving in the financial world, I owe a big part of my journey to this amazing community. So, if you're thinking about joining an investment club, I highly recommend the Money Weight Club. The collective wisdom and support, it really makes a world of difference, and you're able to share a lot of experiences and ask so many questions, and as you grow and really build your network and your community. So I hope to see you soon in the Money Weight Club.
Fantastic. So, hi, Andrew. I see you. Hi, Andrew from Umuahia. Thank you for coming, for joining this conversation. And the final story for today, it's really been in the news. The central bank has demanded that all banks raise their capital. Now, what does that mean? The last time we had this kind of announcement was in 2004, where Charles Soludo announced that all the banks should recapitalize. And to imagine that the banks were struggling to have 25 billion in capital. Oh my goodness. See where we are right now. But from then, we evolved from 25 billion to a point where the central bank issued guidelines around, okay, if you want to be an international bank, this is your minimum capital. If you want to be a national bank, a regional bank, then you now have like the merchant banks. So everybody had their own capital requirements. And so, for example, the Access, the Zenith, the GTBs, they are international banks. And so they had a higher capital requirement. Now, what has happened is that the central bank has said, see, guys, everybody needs to up their game. Now, the instructive thing about it is that central bank is saying that you must get fresh capital. What do I mean by that? So if you run a business and maybe you started off, you register with the CAC with $1 million or $1 million as your capital, right? A million CDs, wherever you are in the world. and then you make money over the years. So let's say you were in 2024. So let's say you register your business in 2004, right? And your capital was 1 million. Then you make money over time. But I mean, your business is making money, so you don't need to raise capital. And then over time, you've paid off dividend, but the amount of profit you have retained in the business is like maybe 5 billion. And then the central bank now comes and says, no, you see that 1 million you started with, in my records, that is what you have as capital. So I want you to move from 1 million to 5 billion, but go and get fresh capital. It must be fresh. I will not go to recognize your retained earnings. And why is it, you might say that that's being unreasonable? Yes and no. Yes, because logically, based on proper accounting standard, your retained earnings, when you keep your retained and your when you retain your earnings, you are actually injecting capital into the business. So from an accounting standard, it doesn't make sense. But from what's on ground, right, you realize that a lot of times banks do not show, a lot of banks, or some banks rather, do not behave like the capital that they say they have, right? The sense of, especially if you're in the bank market, you would understand what I mean, where a bank says they have this level of capital, but when they are pressed for cash, they can't deliver. You're like, "Ah, but you guys should have capital. What is the issue?" Right? So what the central bank is doing is, I don't know what you guys have been doing in the past. I don't know how you came about this profit that you say you have, right? But I'm not even going to go into whether it is real profit or real retained earning, whether it's really cash, because as a bank, if you are declaring profit, then you should be backed by cash to a reasonable extent. But we're not seeing that level of liquidity. You get now. So if you're saying, whatever you say you have, oh, I'm not arguing with you, but go and get fresh capital outside. What is the implication? One, for shareholders, current shareholders, you're going to be diluted. Everybody, what does that mean? You're going to bring in fresh cash. So if, for example, you were, um random example, you were 50% shareholder of the company, and let's say the bank had 100 billion in capital, and you're saying go and get another 100 billion, for example. The fact is, except if you go and bring 50 billion of the fresh capital, you are not going to be 50% shareholder again. So that's just it. So it's changing the capital structure. Everybody, if you want to be a part of the future of banking, you need to bring in fresh capital. That's one. Secondly, also, a lot of these companies, there are two things that are going to happen. Lots of these banks are either going to come out and do a capital issue, capital raise, right? What's it called? So, and I think GTB and Access have also notified that they're going to come out to do a capital raise, right? But on the back of that capital raise, what's going to happen is some people will succeed and some people will not. That's what happened in 2004. So let's just know that. So there'll be mergers. So some banks would either one, buy up smaller banks so that they would merge the capital of the two and everybody grows up. Buy up smaller banks, or the smaller banks will collapse. That's the end. Or downgrade. I said there's a capital requirement for international bank, for national bank. If the journey is too far from where they are, they might decide, okay, let's move from a national bank to a regional bank. A regional bank might be, okay, let's focus on Western Nigeria, or let's focus on Eastern Nigeria, whatever, right? But there's going to be a lot of that. Now, for you as a retail investor, what do I think? What should you be doing? For the banks that you already have faith in, there are some banks that they are clear cut, they are here to stay. There are some K-leg banks we know, but there are some banks that are clear cut, here to stay. Those ones, the fact is that they would probably come out with a fresh issue. Now, I personally am of the opinion that it might be better to buy in the market right now. Why do I say that? Let's pick an Access Bank for an example. By the time Access Bank signs this partnership that we just talked about, by the time they do all the things that there've been a couple of announcements about the company in recent times. The fact is that those things have not yet been priced into the current stock price. By the time they get a company or whatever to do a proper valuation of the bank, the price that they would put, especially given the devaluation and especially how Access Bank is becoming a global bank, right? It might not be this 20 something that you are seeing right now. That is just it. So if you are thinking of where to position yourself, I've said something without saying it, figure it out, right? And then for some other banks who have been private, there are some banks that have been private in the past, like a Providus. You might see them now coming to the stock market. Why? Because the stock market, as the stock exchange, is where they might be able to raise the capital they need for the business to continue as is. I hope this was useful. If we have any questions, if we have any thoughts, the way these sessions are designed to run, at some point, I'm going to start bringing people in and we have these discussions with other people. Hi, Ijo from Ibadan. Um, if you're just joining, the replays will be on this same link on YouTube or whatever platform you are seeing it on. So you can actually start from the beginning. And if you have topics or stories that you want us to discuss or you'd like me to unpack, this is just day two. This is just the second episode. So let's just follow me on social media. Oh yes, all our Ladile or the Money Week Club, and just drop it. Let's discuss it. What does this mean and all that? And as we build that every Saturday flow, one day you just say, okay, Andrew, come on the show. Let's talk. Let's discuss. Let's banter and all. Thank you so much, everyone. Have a beautiful rest of the weekend, the long weekend. Take care and goodbye.